This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Hello and welcome to the Research Talks here on Stockbox with Alan Green, where today, Alan, you're going to be presenting the investment case to us for MetalNRG and ECR Minerals. But before we get into that, How are you? Are you doing okay?
I'm very good, thanks. And I'm talking to you today from the Sussex Innovation Centre, where, of course, we've been one way and another for about 21 years now. We first came here in 2000 with Share Crazy. That was a long time ago. But so they have a podcast and CEO interview facility smack bang in the middle of the reception area, and it's a pod. And we're expanding our operations and what we do. So I thought I'd take full advantage of it. And I'm talking to you through this very smart Rode internet mic, or NT1 mic as they're called. And it's very good indeed. So very good.
Good.
How are you,
good.
Mark?
They sound very well, thank you, Alan. I'm talking to you from my home studio as well. No, it's good that you've got a little podcasting pod, and that'll be the regular place we talk. There'll be because occasionally I have heard your family dog that likes to join on the podcast just a little bit. Every so often, just likes to let us know that he or she is just there in the background. So I guess we won't be having those interruptions anymore. But that's fine.
I may not be here all the time, but certainly, the problem is that my daughter and son-in-law are living with us at the moment. So as a result, we get Amazon packages turning up several times a day. So whenever the front door goes, of course, the dogs go berserk. So
yes, indeed.
It is an issue, but anyway.
Yeah. No, it's nice. It's nice. So you want to start us off today with MNRG, don't you? Who they've announced that they've gone profitable, haven't they, this week? Quite.
They certainly have. They certainly have. Yeah, it's a major milestone for the company this week. As listeners will know, I interviewed Rolf Gerritsen and also Pier Paolo Rocco, who's the managing director of Brit NRG. And Brit NRG, of course, is one of the divisions into in the company. So MetalNRG as a group, I guess you could say it's a full cycle group in terms of the operations and the assets that it owns. It has its direct investment division, where it takes majority stakes in projects, and an indirect investment division where it owns assets and is not a passive investor, but certainly not an active investor. Just a bit about the board. Of course, Rolf Gerritsen, the chief exec. He's 55 years old, 30 years experience. He speaks 4 languages, and he's worked all over the world, literally, and on a number of projects, both in mining and energy. Chris Campbell's the chairman. He's a chartered accountant in Zimbabwe, worked for Zimbabwe coal bed methane. And of course, one of the non-execs that's a fairly mercurial character, Christian Shaflitsky, 40 years experience, and has a raft of mining appointments that's on his CV, and of course is currently on the board at Eurasia Mining. Then Pier Paolo Rocco, of course, who is also a director on the board, and he is managing director of Brit NRG, the group's UK oil and energy business. And Pier Paolo has formerly worked for Total, ENI, and Shell. So firstly, we're going to cover the direct investment divisions. We have the Gold Ridge project, which is an investment into the Arizona project of 3 historic gold mines: the Gold Ridge mine, the Gold Prince mine, and the Dives mine. These are located south on the Dos Cabezas Mountains in Arizona, and the area that has been identified has been reviewed by SRK Exploration. And of course, when I've spoken in the past, various directors and chairpeople of SRK have been heavily involved with a number of the companies we work with as clients. So the area that has been identified is a prospective 5-kilometer vein, vein and strike area. tailings from the historic works there show up to 115 ounces per ton, and in some cases just under 4,000 grams per ton, which is astonishing. But of course, when you take it across the whole the whole of the territory and the whole of the strike area, the average gold values come out somewhere between 0.05 and 6.5 grams per ton across all three mines. Back in May this year, SRK undertook a review of the data from the mine and said there was decent potential there for discovery of further mineralization, recommended a two-stage work program, and said it believed that the data when collated could confirm the presence of a bigger and more widespread system. And as is often the case, when you have these historic gold mines using modern mining techniques, using modern methodology, it's possible to identify new seams or new geological anomalies that hitherto hadn't been identified. And in the interview, when I spoke to Rolf, he said that updates were due in the run-up to Christmas, so we can expect to hear more from that as we go forward. Mm-hmm. So we then come back to the UK. We come to Lincolnshire, in fact. BritNRG, of course, this is this company is now sort of owned by it's owned by MNRG as a whole. And this BritNRG has 3 producing licenses and 6 exploration permits at the producing well, which is Wisby, and it also has assets at Newton-on-Trent and Reepham. Wisby is currently producing, and in the update announced this week, the company said that production had basically doubled. The production levels had doubled from earlier in the year, and the outlook was indeed very strong for the rest of the year. In fact, as regards the developments there, Pier Paolo outlined the permits that were in place there. They were looking at a potential 5 wells five wells at Newton-on-Trent, and also developments and partnerships at Reepham too. The production is now at 3,500 barrels per month, compared with 1,500 barrels per month, which is average across Q1 this year. So that's a big move forward. And most significantly of all, as we said at the start, BritNRG is now profitable, and that means it's bringing meaningful cash into the business. Mm-hmm. Now, when you consider MNRG is currently trading at 0.5p per share, gives it a market cap of 5.3 million. With the other assets it has, I believe this company is fundamentally undervalued. It's, particularly as the company has sufficient cash for all its future activities, and this is supported by growing cash flow from BritNRG, which, as I said just now, is now a profitable asset on the business. So we then go to Italy for the other direct investment asset, and this is a special purpose vehicle set up as part of a joint venture with EQTech or ECTech, which investors will be aware of and listeners will be aware of. I've talked about ECTech before, and the company is seeking to identify what it refers to as shovel-ready green energy infrastructure projects in Europe, and it's currently is recommissioning a 1 megawatt waste-to-energy plant that burns straw pellets and wood chips. MNRG holds 26.6% in this asset for an investment of 700,000 euros, and it's expected that this will generate EBITDA of some 750,000 euros per annum. And again, referring back to the interview the other day, when we discussed this, Rolf Gerritsen said that the waste energy project was progressing rapidly, and they expected it to come into production early in 2022. So in real terms, that's about 6 or 7 months away, which is very near term.
Mm-hmm.
The company are also looking at other waste to energy projects as well, and we are expecting news on that. And there are other sort of balls in the air at the moment for the company as it goes forward. And Rolf indicated and intimated that there would be further news to come. So we then come to the indirect projects, and these are passive projects to an extent. The company owns, MNRG owns just under 10% of a uranium project in Kyrgyzstan. It's owned by a US company called Mining Invest, and it's passive and inactive at the moment because the Kyrgyzstan government imposed a countrywide ban. But there are noises coming out of there now, and if as a result of the developments in that country, the government pays damages to the mining company Invest, then MNRG will receive the equivalent damages back as a result of its shareholding. The reason they're hopeful of this is there's a new government, incumbent government now, and they're hopeful of a positive outcome, and news is expected going forward.
Mm-hmm.
Final investment, indirect investment, is just under 4% of a Tanzanian asset, the Lake Victoria gold asset. The investment was abandoned due to poor due diligence at the time, but as often happens with these assets, a change in the value of the underlying asset, or a change in mining technology could well see that come back at some point. So in summary, when I spoke with Rolf and with Pierpaolo the other day, as regards BritNRG, the company that they're aiming to generate 1,000 barrels of oil equivalent per day, and clearly with the moves they've made so far, they're now up to 3,500 barrels a month. They're well on route to do that. And they're seeking to expand the company further with a combination of organic growth and further acquisitions. So, given where we're at the moment, I mean, if we look at the share price action over the year, really we are just off year lows now. The share price has recovered from a year low that it's set at just under 45 pence, 0.45 pence per share. Currently at 0.5, as I said. So really, at this level, there's everything there's every potential for a great deal of further upside. And I think in terms of valuation, the market cap at the moment seems to be below the value of the assets and the license agreements that the company has in place.
Mm. What do you think might be the inflection point here then? If it's significantly undervalued, then what do you think might be the real catalyst moment? Do you think any particular part of the business?
Well, I think the move to profitability for BritNRG has galvanized the shares. But as we know, Mark, I mean, across the summer, energy and mining stocks have undergone a malaise and across at every level, and it really takes I think a dynamic development to actually change that. Mm-hmm. But I think what we're going to see from here on in are further updates, further developments at BritNRG in terms of the production. It's already profitable, so aiming for 1,000 barrels of oil per day across the projects. The Pierpaolo said they are developing Newton-on-Trent potential for 5 wells there, and of course Reapem. So once these come to fruition, then it's very possible that the company will be generating an awful lot of cash. And of course, when the waste to energy plant comes on stream in Italy in 2022, there's EBITDA there of 750,000 euros per annum, of which MNRG will receive 26.6%. And of course there are other projects that Rolf has indicated will be coming online too. And of course, if there's a material development in the Goldbridge project in Arizona, any one of these assets taking a quantum leap forward or a significant material development is likely to impact in a very positive way on the share price, particularly given where it is now.
Okay, good. Excellent. Thank you very much for that, Alan. So the next company is ECR, isn't it?
ECR Minerals. Yep. Well, of course, Mark, we know this company well, and we've spoken about it on many occasions. And it's been, I think, along with other companies, mining companies in the sector, ECR has undergone a very quiet summer. Although the shares have they drifted as low as 1.4p intraday at one point, but there's strong resistance and the shares do bounce back. But certainly since yesterday, we've seen the shares recover sharply to this is currently sitting at just below 2p. And I think if the activity continues as it has been, then we're going to see it push a lot higher. So I'm going to talk about the Bayliston and Kreswick projects. ECR is exposed to it has two flagship assets, I think you could refer to them as, and these are the Bayliston and Kreswick projects in the Victoria Goldfields in Australia. And of course, this is a prolific gold producing region by any standards, has been for well over a century. And this goes all the way back to people prospecting in local streams and sifting out little chips of gold from the streams in the region, all the way through to some of the major producing mines. We have the Fosterville mine, which is close to the Bayliston license area. Then, of course, to the west of the Bayliston license area, we have the Fosterville gold mine. And Fosterville produced well over 150,000 ounces of gold in the second quarter this year alone. But the geology in and across the region is very similar. And indeed, some of the gold grades that have come out of Bayliston reflect some of the grades that have been found at the mine head at Fosterville. So ECR as an entity has always been well funded, and I think where it currently sits at the moment, the group reported in an announcement yesterday it had 4.2 million in cash. And that was after paying a deposit on a property, which I'm going to come to in a second. But on Bayliston, the company is seeking to understand the geology of the area. There are complex geological folds in which there are pockets across Bayliston, but it's significant in that the demand for licenses in the region is such that Newmont Mining last year applied for a license area immediately adjacent to the company's Black Cat prospect area within the Bayliston license. Most recently, they've undertaken drilling at Cherry Tree, and the drilling across the region is to gain an understanding and a clear picture of the geology in the region, and obviously where the best place to put a mine would be, or to form a joint venture. So that really is Bayliston up to date. The company is providing a lot of information on social media, Twitter's. If you follow ECR Minerals on Twitter, you'll see updates most days from drilling updates and developmental updates. So we then move further south. We then move to the Kreswick Project, and Kreswick is north of Ballarat, and an anomaly runs through this area called the Dimmock's Main Shale, which is highly prospective for gold. And the company has undertaken a drilling campaign which started early this year, headed up by the team's head geologist, Adam Jones. They've undertaken drilling near to some historical gold mines, but also in virgin territory, and that also applies to Bayliston too. So they're testing virgin territory and getting an understanding of the geology. And certainly a couple of the holes that were drilled there, hole 3 and hole 4, returned 9.93 grams per ton and 23.5 grams per ton respectively, and those respectable grades, as I say, comparable to some of the head grades found at Fosterville, but also the Ballarat gold mine, which is very different to a number of mines, it's what's referred to as a narrow seam mine. And Adam Jones put this across very well in a recent interview, where he discussed the geology in the area, and he described what's found underground as effectively mineral chutes. So you might have a mineral chute that's some 100 meters long and a meter or two wide, and within that you've got these sort of gold grades. Now, clearly, when you take a lump of ore or a chute that size, and you do the math on the gold, you've got many millions of dollars worth of gold potentially within each chute. And that's how Ballarat was mined. It's a narrow vein gold mine, and Ballarat has historically exploited these mineral chutes over the years. So that's very exciting, and there's clearly the company expect to find a lot more information there as they develop the mining campaign. In the announcement they made yesterday, the company said that they had decided to purchase a property at 35 Brewing Lane, Springmount, within the company's 100% owned Kreswick license area. Why is this significant? Well, it's a 16-acre site. It's going to provide a base for activities, so storage. There'll be another core shed developed there, and I think the most telling statement of all, and I put this out, I put a comment out on this yesterday. You just read the RNS. When appropriate, will be the site for the development of the mine decline. Now, the mine decline, of course, is the access point. So as the ore is brought out of the mine and processed, it's then processed on site, and then it's transported off to wherever. So the fact that the company now owns a property on the license area, which will have the potential to develop into a mine decline, indicates to me that the upcoming assay results should make pretty interesting reading. And I know we're due some more assay results in the not too distant future. So those are the two core flagship assets. In addition, the company has licenses to the east of Victoria in the Tambo project, and one of the company's resident geologists, Dr. Rodney Boucher, undertook a thesis there many years ago, having grown up in the town of Bruthen, which is within the centre of the Tambo crossing region. So we're going to hear more about that at some point. And also, early this year, the company announced the acquisition of it set up another company called Lux Exploration to hold the licenses or the license applications for 3 territories in northern Queensland, and there is a great deal of information about historic gold production in the region, and there's a very good table actually that shows current and historic mines. But regardless, these 3 license areas are highly prospective, and obviously once the applications have gone through and been accepted, then work will commence in that area. There are also legacy assets as well the company owns. There's a legacy asset. It sold the Avoca, Mournville, and Timor gold projects in Victoria to Fosterville South Exploration, and has the right to receive up to 2 million Aussie dollars in payments, subject to development work in the area, and obviously future estimates on the reserves in the ground. It also has a 25% interest in the Dangley Gold Project, which is owned by a local company in the Philippines called Cordillera Tiger. There's been progress on that lately, and we're expecting to hear further developments from that as the year progresses. But as I say, the company entity itself, the core assets and the focus of work is at both Kreswick and Baillieston licenses. So the company's got 4.2 million currently in the bank as we speak. It's got that property on its books, has no debt at all, and it also owns 2 drilling rigs outright. So it has the ability, effectively, to develop either of these projects, Baillieston and Kreswick, develop them all the way through. Okay, so you're looking for comparisons. What are the next steps that a company like ECR should take? we look what happened to Greatland Gold. A few years ago, Greatland Gold had a market capitalization of about 20 to 30 million. And then, of course, it developed the Havieron asset in Western Australia in the Pilbara, formed a joint venture with Newcrest Mining after establishing a JORC estimate for their territory. And as we know, at the end of last year, the valuation of Greatland Gold, even though it owned after the JV agreements were signed, it owned just 35%. The valuation of Greatland shot up to at one stage 1.5 billion sterling, and that's a huge jump. And I think that's where ECR is so exciting, that it has the cash, it has the infrastructure, and it's developing infrastructure on the ground in Victoria, in the Kreswick area, and also in the Baillieston area. Also has a core shed and a processing centre already in Bendigo. Going forward, I think the company is in an incredibly exciting position, particularly given that the company trades on a market cap currently of just 19 million. Shares, as I say, have proved pretty resilient. We're currently trading at just below 2p per share, although I'm looking at the share price now, it's just pushing on that. So I think I don't think it's going to be here for much longer. That's my summary, and it's a very exciting time to get into a company with no debt and these assets and infrastructure already in place.
Well, 19 million certainly is a low market cap. Was the talk, Alan? I seem to recall of like third-party interest. Was it Kreswick? Did anything come of that? Do you know or not?
Well, they have. I know Craig Brown, the CEO, has been in discussions with third parties, and this is ongoing, and there's always interest because it's such a fertile area for gold prospecting and gold production. So so I know joint ventures have been discussed, but the difference with ECR, unlike many other companies, is it has the cash to actually develop the asset on its own. So it could be, I mean, let's just, if the assay results from Kreswick are significant enough to warrant development of the property and the mine decline as described, it could be that ECR will be able to develop and build its own mine or commence construction. And if it does decide to do a JV, it'll do so on far more advantageous terms, say, than Greatland Gold did. So potentially, we could be looking at a far greater market cap than of course where we are today. But that's speculation. Of course, you can't take that into account. But you just look at what ECR are doing on the ground. They have the cash. The drilling results are proving very encouraging. The assay results are encouraging. They bought property on the ground now, which I think is the most telling sign of all. And they see the potential at that property to develop a mine decline, and that to me is very exciting indeed.
So what's the things that we should look out for, do you think, or investors should look out for? What are the main things that are coming up? Is it further drill results? Is that the initial?
It's assay results, Mike. Yeah, that's it. Assay results all the way. I mean, the company, it's engaged GMP drilling in Kreswick to undertake the work. It's got the second drill rig. It's being shipped. It's on the way to Australia as we speak. Who knows? The company may purchase a third rig, but it's got its own equipment, so it's able to undertake drilling campaigns, what it refers to as aggressive drilling campaigns, at its own pace. It's simply a question of drilling the core, getting the core out, getting the assay results, and then getting the picture of the underlying geology. And clearly you can get some idea with aeromag surveys and geomodeling, but it's getting the drill in the ground, getting it down, getting the core samples out, confirming what you think is down there, that then it then provides you with the information you need to take the next steps to decide to build a mine or drill elsewhere or whatever.
And you said the focus is obviously in Australia. What is this about the Philippines project? Because that is a legacy project that's been there for a long time. But you say that there might be some renewed interest there, is there?
Yeah, well, the government historically have been very anti-mining, so it was a legacy asset. It's on the company's books, and the value is marked down. But there is a JORC resource estimate there of 63,000 ounces, so it's not a huge it's not a huge asset, but it has a 43101 compliant resource. So it's recognized as a valuable asset. And once the team are allowed to get on the ground there and to develop it, then potentially there could be more there. But of course, that's speculation. We don't know. What we do know is that there is a 43101 compliant resource there, and ECR has 25% of Cordillera Tiger, which is the company in the Philippines that owns the asset.
Okay. Well, great. Thank you very much, Alan, there for presenting the investment case for both ECR Minerals and MetalNRG. Both companies, I think pretty good price at the moment, a good investment proposition at the moment, and with a lot of things to potentially come to increase that as we go into the autumn and the volumes hopefully return to the market. So thank you very much, Alan, and we'll speak again in a week's time.
Thanks, Mark. Speak next week.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.